why people would be kind of questioning that one as well now.
Yeah, I was talking to one person who kind of described it as SVB light, that there are these issues around their financial performance. Maybe there could be a potential for the bank run. I mean, obviously, this is all speculative.
Right.
But, yeah, that's kind of where the chatter is right now.
Hey, Hannah, what does this mean, though, for the entrepreneurial sector and the startup community in Silicon Valley?
Yeah, I mean, I was talking to one founder, they're early stage, and they're like, I've never seen anything like this. I'm new, I'm starting out. I don't know what I'm going to do next, and this is a huge blow. I mean, this is a really valued institution here. The fact that these financial problems are so severe is really shocking. I mean, the word I've heard used a lot is how sudden this all was. Yeah. And it's really, Silicon Valley has rocked today.
I do wonder, too, was it late yesterday, Peter Thiel, right, his Founders Fund and some other high-profile VC firms, advising their portfolio companies to pull money from the bank. If they hadn't done that, do you think we'd be talking about this today?
It's hard to say, but it definitely contributed. And I know yesterday when I was talking to VCs that they were concerned about a bank run. They were like, I don't know if I should tell my portfolio companies or not to pull. There was a lot of mixed messaging being sent around. The fact of the matter is that we're in a dire situation right now.
Hannah, we only have a little bit over a minute left, but I mean, we were talking about just the frustration of people that you have been talking to. I mean, what's kind of amongst the kind of craziest stories you've heard so far, just anecdotally, from who you've been speaking with?
Yeah, I mean, one person said, I made a deal on Tuesday, put the money in and lost all of it Thursday.
Oh, wow.
It was walking past. Another person joked about opening up a bottle of Jameson. People are just pretty distraught here, and, it's quieted down now, but this morning there were quite a few people just trickling in and out, and, knocking on the door, looking for answers, trying to figure out, what they can do next and whether they can pay their employees.
Hannah, 10 seconds. What are you looking for next week? What's the next story? Yeah.
Yeah, I'm looking at how this is going to impact startups, whether people are going to have to fold, whether, VCs are in trouble. There's a lot to keep tabs on here.
All right, listen, so appreciate it. This was an important angle to get into this story, and so glad we were able to connect with you. Hannah Miller, she's digital currencies and venture capital reporter at Bloomberg News, rather busy right now, joining us on the phone from San Francisco. Carol Master, along with Jess Menton, you're listening and watching Bloomberg Business Week right here on Bloomberg Radio. Catch Bloomberg Wall Street Week with David Weston. That's tonight at 6 p.m. Wall Street time. He will be joined by Equity Group Investments founder and chairman Sam Zell and also former U.S. Treasury Secretary Larry Summers. That's Wall Street Week tonight at 6 with David Weston on Bloomberg Radio. All right, coming up next, folks, we are going to talk a little bit about crypto. I don't know if you noticed, but Bitcoin having its worst week since November. That equity sell-off, fear over higher interest rates, yeah, that impacted the currency as well. An update in just a moment.
Now, your 3-day weather forecast on Bloomberg 1130.
Expect clouds around us for the rest of this afternoon, along with a chance at a few showers. And tonight, periods of rain move back in. Breezy and cold, near 35 degrees overnight. Could be some mixed precipitation developing just outside the city. Tomorrow, morning rain and mixed ending, followed by breaking clouds and breezy weather near 40 to 45. And for Sunday, increasing clouds after some morning sun near 50. This is Gary Best with your 3-day weather forecast on Bloomberg 1130.
Breaking news first.
Panic is spreading in the global markets about the Silicon Valley Bank, the failed SVB bank, dragging down the sector.
You're a smaller bank in America. You're worried for a lot of reasons.
The FDIC says it will move to protect insured depositors of Silicon Valley Bank.
I think there are going to be issues here for regulators to look at.
People are beginning to ask, will there be a white knight, and what bank is next?
For continuing coverage and complete analysis, stay with Bloomberg 1130. Are you interested in a challenging and exciting career at Bloomberg Radio? Visit Bloomberg.com/careers to view our current job opportunities. Bloomberg Radio is owned and operated by Bloomberg LP and is an equal opportunity employer. Visit Bloomberg.com/careers.
Data, analytics, technology, connected. Bloomberg's enterprise solutions integrate systems and workflows across your firm so you can increase transparency and maximize efficiency. Ready to seize opportunities? Start at Bloomberg.com/thinkbigger.
Let's have let people pedal those bikes. Intervals. Burn. Come on, burn. Woo!
performance is more exhilarating on a real road. Introducing the Audi Q5 with a 261 horsepower engine that'll take you 0 to 60 in 5.7 seconds. Always available at the speed and traffic laws.
Don't let someone else drive off in the Audi model you've always wanted. Visit your tri-state area Audi dealer to get behind the wheel of yours today. Or visit AudiOffers.com for more information.
The following commercial message.
Attention small business owners. This could be the most important 10-minute call you will ever make. You could recover up to $26,000 per employee today. And all you have to do is make one short 10-minute call to take your business up a notch or bounce back from these difficult couple of years. Omega Accounting Solutions can help you recover any payroll tax overpayments you made during the pandemic. You may even be eligible to receive up to $26,000 per employee. All it takes is a quick, easy, free 10-minute ERC consultation to determine if you qualify. Omega is the small business champion with teams dedicated to maximizing tax credits. They know their stuff so well that CPAs and payroll companies even turn to Omega for ERC tax guidance. Call 800-300-9ERC. That's 800-300-9ERC. 1-800-300-9ERC. Or visit OmegaTaxCredit.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash. Yeah, it's 4:21 on Wall Street. I'm Charlie. Markets all day long at Bloomberg. SVB Financial Group is now seeking a buyer after regulators closed its Silicon Valley Bank unit, which buckled under the strain of declining deposits and losses in its securities portfolio. A source says the transaction might involve selling the company's assets piecemeal or as a whole, but the goal is to complete a deal by Monday. Wall Street shuns risk as bank jitters hit trading today. A losing week on the week. The S&P was down 4.5%. The Dow this week down 4.4%. NASDAQ on the week down 4.7%. A lot of red on the screen today. S&P fell 56 points, down 1.4%. The Dow ends the week at 31,909, down 345 points, down 1.1%. NASDAQ down 199, a drop of 1.8%. 10-year yield 3.68% with a 2-year 4.57%. Spot gold up 2%, 18.68 the ounce. West Texas Intermediate crude up 1.1%. 76.53 a barrel on WTI. So again, recapping, a down week, a down Friday. S&P today down 56, a drop of 1.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. See if your business is eligible for the Employee Retention Credit Assistance with the team over at Innovation Refunds. They help make the process easier and less stressful so you can focus on your business. To learn more, just head to getrefunds.com. All right, Carol Master along with Jess Menton, Jess, of course, in for Tim, who is on leave. I want to talk a little bit about the crypto space, if we may, because Bitcoin, I believe it's had its worst week since November due to the equity sell-off, fear over higher rates, and really an escalating U.S. regulatory crackdown on crypto combining to hurt investor sentiment again. So we kind of continue to see this play out. I'm just pulling up Bitcoin for the week. Looks like it was down, I think, about 4.5% here.
Right, Carol, really getting under pressure, and especially when you're looking at just more broadly with this overall sell-off in the equity market. And really, as far as, cryptocurrencies, especially in recent months, it's been really hard. And so when you're seeing those segments of the market, especially those banks that have that exposure towards crypto, especially getting hit this week, Carol.
All right, so let's talk a little bit in our weekly crypto segment. Back with us is Mike Belshie. He's co-founder and CEO of Ymca, which, as the company notes on its website, is a digital asset security, custody, and liquidity company. Provides the operational backbone for more than 1,500 institutional clients in over 50 countries on institutions storing digital assets securely. He joins us via Zoom from Washington, D.C., especially appropriate since we want to talk a little bit about regulatory. Mike, good to have you back. Welcome again. Simply put, remind our world, our audience, about your role, your company's role in the crypto world.
Sure. So BitGo has been focused on, custody most recently, which is it's a regulated custody. So we're regulated both in New York under the New York DFS as well as in South Dakota Abroad, we're regulated under BaFin in Germany, in Switzerland, and also coming soon in a couple of other countries. So we've taken a highly regulated approach. We're trying to build market structure so we can build safe access to digital assets.
Something I was curious about is, from your vantage point, how is the recent volatility impacting the digital asset world right now?
Well, look, we're in a macro recession. You know, sometimes we hear a lot of focus, like just a few moments ago, about how the crypto industry has hit so hard, you know, in the last month. And it's true, it has been. But, you know, it's a high vol asset inside of a broader market, which has also been hit incredibly hard in the last 6 to 12 months. You know, we're all experiencing, it doesn't matter whether you're crypto or otherwise, a pretty tough time as we try to recover from the ups and downs of first having had massive money prints a couple of years ago, and then now having massive inflation, Fed rates increase, and then also facing inflation fears.
So in terms of what you've been seeing specifically, whether through operations, conversations with clients, or what they're telling you, I mean, are you seeing investors more hesitant when it comes to crypto? Give us a little bit more color, if you will.
You know, actually, we don't see a lot of that. People are always wondering what's happening with the market. That's true. But there's a couple of different types of people that are invested into Bitcoin digital assets. There's those that are investing because they're speculative about potentially making a quick buck. And there's those that are here, and BitGo and myself personally are in this group. We're here because we actually do believe that we are building a better financial system. Look, technology has not had the opportunity to really change the financial structure that we have, the market structure that we have. There's a lot of middlemen, there's a lot of participants, there's a lot of folks on Wall Street getting very wealthy on the existing system. We have an opportunity to change that, make it more transparent and less risk. Now, I know it doesn't seem like that given the volatility that you see on a daily basis in crypto, but there are some shining lights that are coming through. And that's what we're here fighting for. It's not a 2-month effort. It's a multi-year effort. It's a multi-decade effort. And that's what we're here fighting for. In general, we see a lot of investors that are excited about that promise.
When you're talking about that transparency, what specifically is that? How do you make it more transparent?
Well, look, everything's on a blockchain. And that means every transaction through the dawn of time is recorded in a public way where you can always go back and see it. So we've already had the largest financial crimes ever found and investigated have been off of the blockchain, where what happens is some malfeasance happened in the past, and it may take a month, it may take a year, but you can watch what's happening. And as soon as a bad guy perpetrates, tries to exploit his past ill-gotten gains, you can see it and you can catch him. And that's transparency. On the balance sheet side, you can see exactly what assets people have. We have a product called Wrap Bitcoin, and you can go to a website and you can see in real time, 24 hours a day, 7 days a week, exactly what the finances of that particular product are. So you don't have to wait until the quarter and get 90-day out-of-date audits. We can give it to you every day in real time. That's transparency.
So how do we make the crypto world work? Which I feel like, and I just said to Jeff, I hate that we kind of say crypto world because there's a lot in there, and I feel like it's not apples to apples. You know, we throw blockchain in there, and that's related, obviously, but it just doesn't all kind of mesh always in terms of comparison. But I do wonder, you know, Mike, if the whole idea of digital currencies was to be kind of away from the traditional infrastructure with kind of less fingers in the pot, how does the regulatory environment come in there and kind of keep it pure the way it was meant to be?
Well, look, we do need some amount of market structure, checks and balances, elimination of single points of failure. A lot of the basic principles of security overlap with, like, how do you have sound money? So the idea that you give your assets or your cash to a single party and he manages it entirely without any oversight is a bad idea. Bernie Madoff made it very clear. He said publicly, if his clients had required him to use a third-party independent custodian, he could not have perpetrated this crime. So we know some of the basics of how to solve this. I recognize that in recent months, there's been a number of failures. And in general, it's not because Bitcoin is off and inherently rogue.
Right.
It's because Bitcoin has not been included in the financial system. And, we could talk about Silvergate Bank, where the entire burden of $1 trillion asset class's banking was basically laid to rest on the shoulders of Silvergate Bank. Now, what we should have had is instead of a single bank with 85% exposure to crypto and a major concentration risk, we should have had 100 banks with 2% exposure to crypto. And this bank run never could have happened. So what we need quickly is for the U.S. regulators to get comfortable with crypto, to start welcoming it instead of shunning it and pushing it away, and making a robust market. That's what we need.
And I'm glad you brought this up because we had this week with SVB, the biggest bank failure since 2008 when you're looking at what's happening in Silicon Valley. But to back up and think about what we've been chatting in recent months, FTX and that collapse leading into this. So what do you think was the big takeaway of what we should have learned from FTX's collapse as far as how this moves forward?
Were you ever asked to be a custodian for them?
So we were not a custodian for FTX prior to their bankruptcy. We actually are the custodian under the new management. So John Ray has taken over as CEO at FTX. The first thing that he did was he installed a custodian to take care of the assets. Prior to that, the assets were held by the internal people working at FTX, and of course it allowed them to perpetrate crimes that we only learn about later. But the thing to learn about FTX is simple.
And again, we should point out, as we've been doing on Bloomberg, is they're still figuring it all out in terms of what actually happened and what criminal charges are accurate. So we just want to put that out. Go ahead, Mike.
Sure. Look, the basic thing we need is we need checks and balance and market structure. FTX had two roles. It owned a company called Alameda Research, which was a prop trading firm. Some people call it a hedge fund. At the end of the day, that's proprietary money, it's investor money, it's high net worth people. Like, they can do what they want, they can take crazy risks, they want to lose all their money, no problem. The second part of FTX, of course, was the exchange. The exchange is part of market infrastructure. So when it comes to market infrastructure, where you're talking about the CFTC and derivatives, or whether you're talking about the equities world, you will see a series of companies, exchanges, broker-dealers, clearinghouses, transfer agents, custodians, and banks. And these come together to provide checks and balances and robustness, which prevent the types of failures that we had at FTX.
Right.
Unfortunately, without those in place, Sam Bankman-Fried took the money out of the exchange, which was supposed to be known, quantified risks, and, infrastructure, and he took it and he put it in his prop trading firm.
Again, they're just figuring out all the details, but I hear you. Mike, we've run out of time, but I know we'll continue this conversation again in the future. Good to check in with you again. Mike Belshie, he's Chief Executive Officer of BitCo. He's also co-founder